Before I invite Frank to join me on the stage, I do want to give a shout out to Suresh Muthuswamy, who was a previous speaker, who till recently was running the North America unit of Tata Consultancy Services. He introduced me to Frank. So Suresh, thank you so much. So with that, please join me in welcoming Frank to the stage. Thank you. Have you sitting on that side? So Frank, it's wonderful to have you here. Thank you for coming down. I do feel a little less guilty, as Rajesh already mentioned, that you have another reason to visit Boston. You haven't done this only for us, but I'm sure you would have done it for us as well. I want to start with, our topic today is the AI and what might happen to India, or what India might do in response to the trends in AI. But before I do that, I want to talk a little bit about your own background. And I was looking through some of your biography, and I started to wonder if really somebody was planning and preparing you from your early childhood to become a leader in global technology. So walk us through your early childhood and the elements that perhaps have helped you become what you become.
So first of all, Ravi, thank you for having me, and to the board and the rest of the Northeastern community. It's great to be here. So thank you for the opportunity. I would have done this any day, any time. So thank you again. It's a great initiative, and I applaud the work of the center.
Thank you.
Look, I don't think it was planned. It was luck that got me to where I am. But they say that luck favors the prepared mind, and I was lucky to have had some opportunities in my life that allowed me to get to where I am. So quick background about me, for those of you that don't know. I grew up all over the world. My dad was a diplomat for India. So when I was born in Africa, in Kenya, because he happened to be there at the time, and for the early part of my life, I was in Africa in 2 or 3 different places. And then traveled with my parents every 3 years to a new country, every now and then going back to India when my father had an assignment back at the home office in Delhi. When I was a teenager, my father had an assignment in New York, and it was the 1980s, and one day my dad came home from the office, and he had been reading the New York Times, and he said, "Frank, there's this new gadget called a computer. It seems interesting, a personal computer. It seems like an interesting thing. I think it might be the future. You should learn more about it." And luckily for me, my high school at the time had just bought a couple of PCs. I taught myself how to program, and somewhat the rest is history. I learned how to program. I got really interested in computers in the early days, and wound up getting a job as a programmer when I was in Hong Kong, wound up staying there, and went on from there.
Your international travel certainly prepared you to become a global executive. But what puzzled me a little bit was, coming from an Indian family, you didn't become an engineer or a doctor or a civil servant. You studied business administration, even though you had an interest in technology. Why was that?
You can't, the truth be told, Ravi, I probably would have been an engineer if I'd had the opportunity. But one of the issues was that as we traveled around the world, you kind of had to do what was available in the country that you were in. And so when it was time to go to college, I wound up, we were in Hong Kong. And the closest thing I could find to computers or engineering was a business degree with a major in information systems.
Oh, okay.
So I wound up doing that.
Okay.
I wasn't smart enough to get into engineering school.
No. Okay, so I didn't know about the information technology piece of it. So you then come to the US, and you come to Carnegie Mellon, which is not surprising given your technology interest, and you get an MBA. And then your first job is with this company called Dun & Bradstreet. I remember going to the library, pulling out their volumes before everything was on computer, and looking through, and you had actually data on foreign companies as well as just US companies. What attracted you to that company?
I mean, the truth is they gave me a job.
That's a good reason.
In those days, I was a foreign student, and they gave me a job. It was a great job, and look, they were a very tech-enabled company, so I was very happy to work for them. And in a sense, that's the only job I've ever had until I formed Recognize, because I went to work for Dun & Bradstreet, and from there I started Cognizant. Cognizant started as an in-house development center for the Dun & Bradstreet Corporation. And so I joined Dun & Bradstreet, I went to India and got Cognizant set up and stayed there for 26 years.
Yeah, the rest is history, as they say. You were there 26, and 12 of them you were CEO of the company, and during that period is when really the explosive growth happened. But the other thing I found interesting about Dun & Bradstreet, and this is a bit of a detour, is I didn't know this, but out of Dun & Bradstreet came Gartner, came Nielsen, and Moody's. Is that correct?
Absolutely. At the time when I joined, we were already a conglomerate. So what had happened was that over the sort of 1980s, Dun & Bradstreet had moved from the original, or they had taken essentially the economic value, the cash and market cap that they had built in the traditional credit business, the credit, or rather the credit reporting business. And they had gone out and started buying information services businesses in every category. So they had bought, as you said, 2 different Nielsens. There were 2 different companies called Nielsen. There was Nielsen Media Research that did the audience measurement for media companies. Nielsen Marketing Research that did fast-moving consumer goods. What was called IMS in those days, now called IQVIA, that did pharmaceutical market research. We had Moody's, we had Gartner Group, and so that had already happened. And then later, I think in the mid-1990s, about 1996 or 1997, D&B made the decision to break it all up. And so they broke up all of that and created all these separate independent businesses.
Okay. So all of them didn't come organically out of D&B? Okay.
No.
I was wondering how one company could have spawned so many fantastic companies.
This was a series of acquisitions that they did over the 80s, and then a series of divestments that they did over the 90s.
Okay. Let's turn to Cognizant, because, when people hear your name, that's the first thing that pops up in their minds, is how you built this great company. When you became CEO, I think they had 30,000 employees. When you stepped down as CEO or moved on to become executive chairman, you had 300,000 employees. It had become a Fortune 200 company with a $40 billion market cap. What was that like to create something like that over such a short period of time?
It was a lot of hard work, but a lot of fun along the way. I had a great team. Some of the former Cognizant team is here in the room. And it was a great time. We were in the right place at the right time, right? So a big part of success in business is picking the right opportunities, being in the right place at the right time. But then I would say we executed really well with an incredible team. So if you look at the end and you look back over the time at Cognizant, the 26 years that I was there, and you say, well, what was the secret of success? When we started the business, even before I became CEO, it wasn't a particularly unique or interesting idea. There were 700 or 800 other companies that had the same idea that we did. Suresh's firm, TCS, had been around decades at that point when we started Cognizant. So the idea was not new, it wasn't revolutionary. And we didn't particularly have anything in the idea that was differentiated. What we did do was execute really well and build an incredible team to do that execution. And most importantly, that execution and that team created a really, I would say, differentiated culture. And we don't often talk about culture, but culture really was our competitive advantage through all those years. And it was the culture that allowed us to learn, to change, to pivot, to rapidly jump on new opportunities. And it was all those things, I think, is the team, the culture, and great execution that made it what it was.
I mean, you started after many of these other companies, including Infosys and Wipro, and you overtook those companies. And from what I read, one of the elements that distinguished your strategy was that you went for a lower margin but a faster growth by providing really outstanding service to your customers. Was that a scary thing to do, or was it just a very natural thing for you to do? Because I can see stock market pressures on you to focus on margins. How did you manage the investment community through that journey?
You know, I think investors are pragmatic, and so you have to be able to tell a credible story, but then you have to be able to deliver on that story. And so, for all the time I was there, you said that I was CEO for 12 years. When you're a CEO, you don't count in years; you count in quarters. And so I was CEO for 48 quarters, 49 quarters actually. I think I reported 49 quarters. And in all of those 49 quarters, I think with one exception, which might have been during the financial crisis, we did what we told investors we were going to do. And when you have that credibility, investors will give you they place their, they're placing their capital in your hands in a way, and so you have to be able to deliver on returns on that capital. And we did that. We demonstrated that if we invested in the business by taking a lower margin, we could reinvest in the business, and that generated faster growth. We had figured out that flywheel. So it was a good investment for our investors.
Okay. Out of that process, as you created 300,000 or whatever number of jobs in India, and all the other companies did so as well, we've reached a point now where there are maybe 6 million people working in this sector in India. And we have now the AI trend coming along. In terms of exports too, I believe it's like $200 billion worth of exports coming out of India, a lot of it going to the US. How does AI relate, or how is it going to affect the prospects for India to continue to play in that space?
Yeah. Look, I think when we started Cognizant, if I can take you back to the early 1990s, there was this thing that had happened, or that was happening, which was that low-cost bandwidth. I'm dating myself here, but for those of you who may be not old enough to remember, in the early 1990s, this was before the commercial internet. So, but bandwidth costs were starting to come down. And so it was the cost, the combination of low-cost bandwidth and some other collaboration technology innovations that allowed this whole industry called offshoring to happen. And all of a sudden, this trend, which picked up momentum through the 1990s and 2000s, allowed a whole industry to develop. Firms like Cognizant emerged, and so on and so forth. We are having another similar moment today in the industry, where AI is going to disrupt the entire industry, like offshoring did in the early 1990s. And I predict that 10 years from now or 20 years from now, there'll be some other CEO or former CEO sitting in this chair who will be talking about the new Cognizant that got created during this period of time, because there is that opportunity. Because AI is going to disrupt the services industry, not going to, it already is disrupting the services like offshoring did back in the 1990s. And so I think that the disruption is happening, will continue to happen, that AI will make developers and everybody that's involved in the software engineering lifecycle more productive. And the firms that exist in the industry today are going to need to adapt to that new reality.
So what is your sense of whether the Indian companies are ready for this? What do you see as early signs? Is there an Indian Cognizant of the next avatar of it in the process of being created? Can the existing companies transform themselves to compete in this space? What's your prognosis?
Look, it's the only time will tell. I mean, I think that it's the incumbents versus the insurgents. there are many insurgents out there already. We see them. They're young firms. Very few, if any, of the insurgents have reached any degree of scale or impact yet. There are a few that are starting to get to scale. Probably the most prolific is not an Indian company, but a company called Palantir that's public and I think has built the next generation model of what this industry might look like. But besides that, there are not that many examples of the insurgents who have reached scale. So that creates the opportunity for the incumbents to reinvent themselves. But the innovator's dilemma is such that incumbents have a lot of trouble historically in reinventing themselves. And so I suspect that even though anything that I'm saying is not particularly new or revolutionary, and every CEO of every incumbent has heard some version of what I'm saying, it's not clear to me that that all the incumbents will move fast enough to be able to change the business model, because there are some real challenges with changing the business model in the age of AI. And in fact, if you believe that this is similar in nature to the disruption of the 1990s that created offshoring, if you looked at the incumbents, if you look back now at the incumbents that were strong pre-1993, 1994, when the offshoring industry happened, very few of them still exist today of that generation.
I see.
And so, there's the process of creative destruction is such that, I suspect that some number of the firms that exist today won't be here 20 years from now.
But is the creative going to happen here and the destruction is going to happen there? Or will there also be creative happening in India?
I think I'm very optimistic that there'll be creative happening in India. I mean, I think, today innovation is happening all over the world, and the barriers to innovation happening all over the world, particularly in the services industry, are now much lower than they were, back in the 1990s when we founded Cognizant, as an example. So I think that innovation, you'll start to see, or you'll see, and in fact, the insurgents that I talked about are pretty evenly distributed.
I know now you're managing a fund that invests in other companies in tech services. Are you also investing in any companies overseas, including India, or is it all mostly in the US?
We don't think about it that way, Ravi. We just, we're looking for interesting technology services businesses, regardless of where they are. I would say, I think 50, 60, 70% of the companies we've invested in have some operations in India. So, India is a very important part of our portfolio. But we just look for great investments wherever they are in the world.
Recently, there was a story in The Economist, I don't know if you saw it, about how Perplexity is now offering free service for all Bharti Airtel users. There are 320 million customers who will get free access for a year. And Gen AI and XAI are also offering very highly discounted services in India. Do you see that as spurring development of AI companies in India, or snuffing out the potential for AI companies in India?
No, I think on balance, I would say it's the former. I think it's going to spur innovation. Look, I don't think that, I think that it's difficult and very capital intensive to build another Perplexity, to build another OpenAI. But I think that building Perplexity or building OpenAI is not really, there's so many other opportunities that India can play a role in, or in fact, I think not just India, but any other countries around the world. I think AI is going to create tremendous number of opportunities. And so for me, it's a little bit like, I saw when India finally opened up and the internet came to India, which was, again, I'm dating myself, but I remember when that happened. It opened people's minds dramatically in India to what the possibilities were, possibilities that they hadn't been able to see before. And I think that this, availability of Perplexity and other things at scale in India is going to open people's minds, both consumers but also entrepreneurs, to what the possibilities are. And I think you're going to see that, drive a tremendous amount of innovation.
Yeah, I do have a follow-up on that, but In a few minutes, we'll open it up to Q&A from the audience, so please get your questions ready. We'll have mic runners who'll come up to you, and I'm sure you have some very interesting questions for Frank. I want to turn to another challenge that I think is facing the Indian IT sector, because I think there are two big challenges. One is the technology, which is the AI revolution. The other is geopolitics. And I don't know if you would want to get into that or not, but there is the H-1B issue, then there is apparently a bill in Congress that also would discourage offshoring of services to other countries. Now, we know that in the case of India, there are, I think, 1,500 or 2,000 global centers of excellence that companies have created. So there's lots of talent being deployed places like India to help global companies. And that might still continue, even if there's no, the migration into the US slows down. But if that is also stopped, that becomes, seems to me like the equivalent of a global decoupling that's happened in manufacturing between US and China. Are we beginning to see the beginning of a tech decoupling between US and India?
Yeah. It's hard to know for sure, but what I would say is this: unlike manufacturing, the difference with tech work or with knowledge work is that you can accomplish tech and knowledge work in one of two ways. You can bring people to the work, or you can take work to the people. And it's relatively seamless to be able to do that. You can't really do that in manufacturing. But in tech work, it's quite seamless. And I think that these efforts to sort of move, or perhaps slow migration into the US and so on and so forth, I think the water will find its level, because at the end of the day, the world is becoming more technology intensive, not less technology intensive. And to continue to make the world more technology intensive, we're going to need access to great talent. AI will help that, because AI will make the talent more efficient, more productive. We'll have great co-pilots. We'll have super developers that are enhanced by AI. But we're still going to need access to talent. And so my sense is that water will find its level, and that'll come either by combination of work, or people coming to work, and then work going to where the people are available.
So one or the other will have to happen.
Well, even today, it's a combination of both.
Right.
Right. In some cases, people are coming to the work, whether that migration is people coming to the US or other parts of the world. Right. And in other cases, as in the case of the global capability centers, the work is going to where the people are. And so that has already happened. Will that balance get reset? Possibly, as you introduce frictions in the middle, where the balance lies will change. But I don't see any other, because I don't see the demand for technology and the demand for talent as a result of that slowing down. And so what will happen is that the water will find a different level.
Okay. We're going to go around asking for questions, but I have just one more question, and then we'll open it up to Q&A. So if you have your question ready, so you can start to raise your hand in just a minute. The last thing I wanted to ask you, and if you're comfortable responding, please do, otherwise we can skip it. And that is your sense of what's happening in China in AI. And where is the US relative to China? Where is India relative to China? Because these are seen as the three key potential players. Certainly US and China are already very important players. India's role is unclear exactly what role it might play. But can you bring China into the conversation?
Yeah. Look, I think that, first of all, I'll say I don't think AI is sort of a zero-sum game. I think there's enough room here for companies and nations to carve out their space in the AI, this incredible AI journey that's going to happen over the next decade. My sense is that that the U.S. is already and will continue to lead in infrastructure. if you think about the tremendous amount of capital that's going into building out the core infrastructure in the U.S., I don't think that's, all right, not to think, that's unparalleled anywhere else in the world. China isn't anywhere close. India isn't anywhere close. I think if you think about the innovation that's happening, again, at the infrastructure level and at the chip level, a lot of that's happening with NVIDIA and other firms. I don't see that the other parts of the world, whether it's China or anywhere else, closing the gap. But when you go one level up, I think the Chinese are getting very competitive in building models and sort of building the AI, the core AI infrastructure that sits on top of the hardware and networking and that infrastructure. There's fundamental R&D that's happening in China very aggressively. You've seen DeepSeek as just one example. I think we'll start to see more and more of that. And so, I think that there'll be an interesting set of competitors emerging at that next level up in the stack from China. We've already started to see it. We'll continue to see that. And then, as you said, there'll be an interesting question about where does India pick its spots in that ecosystem? My sense is that India's opportunity is at the inference level, sort of at the top of the stack. Because in a way, that's where India has always been strong, even with other technologies. In the places where it's the application of technology, it's where domain expertise is particularly important. I think that's where India will, over time, carve out its niche.
Okay, thank you. Let's open it up to Q&A. If you have a question, please raise your hand.
Shy room.
Okay, over to Jay. Jay is a professor here at the DeMoor McKinney School of Business.
Thanks, Frank. Okay. Great to see you here in person. So I actually had an offer from DBSS out of campus engineering in 1996, which I didn't take. I wish I had and kept the stocks. So my question is, I study organizations and I study organizational behavior. So I have a couple of questions, so I'll keep it short. The first is, one of the predictions that org designers are making is, like you built large companies, right? Like, 30,000 to 300,000. There's a prediction that firm size will go down because non-human agents can be coordinated by fewer humans. So you might have large organizations in terms of revenue and size, not in terms of people, but in terms of economic value added, right? So you might even see a single person unicorn, right? That's kind of a prediction that people are making. So do you see that happening in the near term? One question. And the second is, what is your assessment of the existential risk of AI to humanity? What is your P-doom? Do you think this race to the bottom that everyone just builds these foundation models and just commercializes them without looking at safety? So what do you think what is your P-doom personally? And where do you see that safety piece going?
Wow. Big questions. Yeah. By the way, for those of you that don't know, DBSS was the predecessor. It was Dun and Bradstreet Software, which is the company name before we rebranded it to Cognizant. Look, I would say on your questions, I think on the first one about does organization size shrink as it becomes? Do we see a single person unicorn? I think the answer is it depends on the industry you're in. I think in knowledge and services intensive industries, you'll definitely start to see that. I used to think that at some point, and it's perhaps still the case, that with these large services businesses like Cognizant, at 300,000 people, you started to see some diseconomies of scale. The bigger you got, the harder it became to manage, getting 300,000 people kind of aligned. And now, we have firms like TCS and Accenture and so on that are approaching 1 million people. I think in those kinds of businesses, scale can work against you in some cases. I don't think that, one of the other things I've done, I was on the GE board for a decade. In those kinds of businesses, capital intensive, heavy manufacturing, very deep R&D, that's required, I think it becomes harder to imagine a unicorn that's like one person building a jet engine doesn't seem like it's going to happen anytime soon. So I think it really depends on the industry. But I do think in knowledge-intensive industries where kind of the core value add is coming from the brain power of humans and now increasingly humans plus AI, you'll start to see smaller businesses more resembling ecosystems than companies. Because friction costs are also, friction's disappearing. I'm not sure I'm really smart enough to answer your second question, is really the truth. What I will say is that we didn't talk about it, but I actually came to the United States and I went to Carnegie Mellon because I was interested in AI. I was working on a problem in my job before that was a computer vision problem. And I couldn't solve it. I had failed to solve it. And so I wanted to come to the place where research was going on in computer vision. And so the only reason I tell you that story is that I've been following the field of AI since I came to the US in the early 1990s. And I don't think any of us would have predicted the advances that we've seen in the last 5 years, even 6 or 7 years ago, frankly. And so I think the pace of progress is tremendous. I'm an optimist, though. I think that, I mean, if on one side, maybe I'm being a little bit flippant when I say if we have a world where there's no work, maybe we can all spend our time doing other things. I don't think we were put on this earth necessarily just to work. And the idea that our identity is attached to our work is actually a relatively recent construct. It's a post-industrial revolution construct. So there could be a world where we don't have to work, where the machines do all the work. And I would argue maybe if you took that to the extreme and you said, if there was a world where machines did all the work and we taxed the machines and use that for us to pursue other things, is that a terrible world? I'm not sure it is. In fact, I think I could make a case that that's a reasonable world. I think it's a long time before we get there. I think that the idea of machines going rogue is possible, but I view it as an edge case. I think that if we build it, we ought to be able to know how to manage it. We'll pull the plug.
Any other questions? Yeah. Mira? Yeah.
Okay. Hi. I was wondering, has your stance on AI changed within the past 3 to 5 years since in that time, since it was introduced and became more known around the world, you've got to spend a lot more time with it in comparison? I was wondering if your stance has changed toward it or how it will change the world?
Yeah, I mean, look, I think, as I said a minute ago, before large language models, before transformers, before the seminal paper, attention is all you need, before all of that happened, AI was sort of a very interesting technology, as you know, but it was sort of, I would say, plodding along in many ways, and we hadn't seen dramatic improvements. And so it was, it was 5, 6 years ago, it was an interesting technology, a very important part of the ecosystem. And then 5 or 6 years ago, there was this renaissance in a way, and it's hard not to have changed your perspective, at least for me, on AI in the last 5 years, given everything that's happened. I think that 5 years ago or 6 years ago, you would have made the case that it was an interesting technology to solve very specific sets of problems, very specific types of applications. I think today you make the case that it's a very general purpose technology. You couldn't have made the case 5 or 6 years ago that it's a general purpose technology in the way it is today. And that the general purpose nature of it, I think, will only get more and more significant over the coming years. So I think, I think we're just we're at the very, very early stages of the technology. And I think over the next decade, it gets even more profound, more powerful in what it can do.
I have a question. My name is Samuel Dragemeyer, and I'm doing Masters in Data Analytics Engineering here. I loved hearing about your story, and kind of what caught my attention and curiosity was the foundation of Cognizant. So I heard you were working for the American company Dun & Bradstreet, and when Cognizant was born and you grew it into what it is basically today, all of that occurred in India. And I was wondering, what led you to choose moving from an American company to growing an entire company there in India? What were the advantages that you saw there, and what were maybe some of the roadblocks that were in USA?
Yeah. Just to clarify, the story of Cognizant is we actually were an American company, and even though the majority of our people were in India, and still are, of the company. So when I left with 300,000 people, I think maybe 200,000 or so were in India, but we had 100,000 in other parts of the world, many of them here in the United States. But the founding of Cognizant is a story of, as I said, this massive trend that we didn't know was going to be as big as it was when we founded the business, but it turned out to be a massive trend, which was, in the early 1990s, software was becoming important to the world, and there wasn't enough talent in many parts of the world to build all the software that needed to be built. India had this tremendous pool of talent, of software talent, but before bandwidth became cheap and before the internet, those were islands, and so there was demand for talent demand for software in one part of the world. You had talent in another part of the world, but the two couldn't connect. And then all of a sudden, the internet happened, bandwidth became cheap. You wound up with collaboration technologies on top of that bandwidth. So again, this is going to sound crazy, but things like email happened, and those kinds of things. And so you could actually collaborate reasonably seamlessly across the world. Again, I'm dating myself, but in those days, if you wanted to pick up the phone and call somebody in India, you were going to spend $5 or $6 a minute to make a call. And then all of a sudden, bandwidth became cheap, and we were able to make calls almost free across the world, right? So all of these things happened, and it enabled collaboration. And then what it enabled was this work that we needed to do in one part of the world could suddenly be done from people by people in another part of the world. Now, this all sounds like completely everyday normal to you today, but in 1990, that wasn't the case. The world was separated because we didn't have bandwidth that held things together. So we had a need. It was a very simple thing. I was working for Dun & Bradstreet. We needed to build software. We had lots of needs to build software in all parts of the world, in the US, in Frankfurt, in Paris. We had clients everywhere. We had to build software for them. And we couldn't get the talent we needed. So my boss, the CEO of Dun & Bradstreet at the time, said, Frank, go to India and set up a development center in India so that you can build software for other parts of the world. At that point, in the early days, it was just for other Dun & Bradstreet companies in other parts of the world. So I did that. I went to India, and we got this business started. It was called VVS. And in the first year or two, all we did was build software for our sister companies. And then, a couple of years in, it wasn't because it wasn't because we had some brilliant vision about what was going to happen. What had happened was that we had built this great team in India. If you remember, I had said that one of the things that distinguished, I think, Cognizant was the team we had built. So we built this great team in India, and we said, look, we have to keep growing, because if we don't keep giving the team new and interesting things to do, they're not going to want to stay with us. And we had sort of saturated our internal market, because the other Dun & Bradstreet companies, we had sold as much as we could to them. So we then started selling to other customers, and that's how the Cognizant journey, in a sense, began.
Great, thank you.
Hello, my name is Nihal Verma, and I'm a student here at Northeastern. I'm studying computer science. Right now, I'm a grad student. So my question for you is, recently there's been sort of a controversial opinion that's been going around saying Indian companies are making wrappers more often than investing R&D into newer models. Like, you can just throw out the buzzwords out there, like a new LLM or a new generative model. But looking at the perspective of a CEO or of an Indian company, you're starting in India, what's really best for business? Leaving aside the accolade of a new model coming out of India, or leaving aside all the honorifics, what's really best for business? And is it, if some company were to invest in R&D and get a new model and start foundationally, is it even worth it to begin with in the first place?
I mean, the very direct answer to your question, I think your question was, in the heart of your question was, what's best for business? I mean, what's best for business is the place where you're going to make the most money, right? That's a very complicated equation. There's been often this criticism of India, as you said, that India is involved in kind of wrappers. First of all, I don't think that's entirely fair, particularly not recently, number one. And number two is, I'm not sure that these businesses that people call wrappers are necessarily worse businesses than other kinds of businesses. They're just different business models, right? And so it's sometimes unfair, in my view, to compare different models and say, well, this one is inherently better than that one. I think that there's a need in the world for both kinds of businesses, and you kind of go to the place where the comparative advantage of India in this case, since that's what you asked about, is the highest. The reality is India has some comparative advantages, and then India suffers in other places, right? India doesn't have the access, for example, to capital that we have in the United States. So you couldn't, all other structural issues aside, you couldn't build the capital, the infrastructure that's being built in the US right now, the GPUs and power and other infrastructure. You couldn't build that in India. Right? You just don't have access to the capital. So in some senses, you have to sort of ask the question, capital is efficient. It flows to the places where returns will be highest. And so the question is, in India, what is that set of opportunities? And I think that in India, that set of opportunities. So then you ask the question, well, broadly speaking, in the AI world, what's needed for success, right? And so you need great infrastructure, you need great data, you need great talent, and then you need kind of policy and regulation. Those are the kind, in my mind, the high-level elements. And India may not. I don't think India has a comparative advantage in infrastructure per se, but India, I think, has a real comparative advantage in talent, and I think India can have, and remains to be seen, but I think India can have a real comparative advantage in data, given the size of the population and the fact that it's a very digitally enabled population. So, you could see India actually building a real comparative advantage in data. And if that happens, then India, I think, has a really interesting set of cards to play in the AI world. So, net, I would say capital is going to flow to where the opportunities and the returns are greatest. And that's a function of the comparative advantage that India will have in the AI space relative to others.
Hi, sir. Thank you so much for your insights and for everything you shared with us. I'm Arya. I'm an undergraduate student here at Northeastern studying business, more specifically marketing and brand strategy. I wanted to just ask you that in a world that changes so fast today and in a world that's that's ever ready for disruption. You spoke about building a company culture. What specifically do you think is the foundations of building a company culture or building an organizational culture that's ready to adapt to this new world of change and of disruption? And how did you look at that in your experience as a CEO in building that sort of culture of adaptability in the world of disruption?
Yeah, look, I think that it's a great question, and you've probably heard this a million times. It almost sounds like a cliche, but if you're not ready to change, if you're not like anything that you're learning here, as amazing as this incredible institution is at Northeastern, there's a good chance that 5 years from now, much of what you've learned, much of the things that you've learned on the skills will be obsolete. And so I think at an individual level, I'll start there, right? What I hope you all take away from your experience at Northeastern and at any other academic institution is that you're building some skills, which I actually think of as the surface skills. But what you really should be building are the core skills that often, by the way, don't come from your classrooms, but actually comes from the interactions with other people and those kinds of things, which is how to think critically, how to interact with other people, how to have great empathy, and most importantly, how to change and how to adapt this idea of lifelong learning. Now, some of those things sound really cliche, but they're almost, to me, foundational. And so that became, I think, the ethos and the real focus of Cognizant's culture. People seem to think, yesterday I was asked a question which said, like, how do you balance when you're running a business, this idea of run the business and change the business? And to me, even framing the question that way is wrong. You have to build a culture that says that every day is changing the business. That if you come into work one morning and you're doing something the same way you did it yesterday, that you're already on your path to obsolescence. There's a great quote that I like a lot, which says that if the world outside is changing faster than you're changing on the inside, then the end is near. And so you have to always be pacing yourself as a company with the change that's happening outside. And if you're running the same business that you were running even yesterday or the day before, or God forbid, 5 years ago, you're on your path on the way to obsolescence. And so that was the core of the culture was, like, we never for a minute were complacent and said, well, it worked yesterday, so therefore it'll work tomorrow. And we had a management team that I think was very open-minded to saying, it worked yesterday, if we're doing the same thing today, it kind of made us like almost uncomfortable that maybe we were not seeing something that we should be seeing.
Frank, can I just jump in with a sort of follow-up on that point? You became CEO in 2007. You went to India in '94 to help start the company or the business, and then at some point you became public. And then I think you came to the US to do some of the building of the company in terms of marketing. Where was this culture coming from? Because some of these things have to be from day one, if it helps. Was it you, even though you were not the CEO, or was it somebody else, or was it the whole team shared in these values?
So it was interesting. They were the original kind of the core. I was one of 3 or 4 people that really shaped the company. Okay. So there was the first CEO of Cognizant was a former McKinsey consultant, Kumar Mahadeva. Okay. So Kumar and I were, and both of us worked at Dun & Bradstreet. And so we were the two sort of from Dun & Bradstreet. Okay. And then we knew nothing about building software in India. So what did we do? We went and said, who's the best firm in the industry? And we went to Suresh's old firm, TCS, and we hired Lakshmi Narayanan, who came from TCS very early on. And so the 3 of us were sort of the three operators, if you will.
Okay.
I spent most of my time on sales and marketing early on. Kumar was the strategist, and Lakshmi was sort of the technologist, the head of development. Shortly after that, we added a fourth person, Gordon Coburn, who was our CFO, who took us public and so on and so forth. So the culture came from the three or four of us.
Oh, okay.
And sort of Kumar brought the McKinsey culture. Lakshmi brought the TCS culture. I can't say that I contributed much because I was just starting my career, so I hadn't really worked in many other places. But it was the three or four of us that really formed the culture, and then we took a lot of pain to promulgate the culture over time to make sure that we continued to reinforce the behaviors that we wanted to see.
Thank you. Venkat?
Frank, good to see you here. Two-part question. Love to your insights on this. With every technology wave, there's generally been panic, right? Panic that there's going to be large-scale dislocation. We're going to lose lots of jobs. And in the previous waves, whether it's AI or otherwise, even just industrial revolution, the rate at which new jobs got generated far outpaced the displacement of old jobs or current jobs. So while there were pockets of dislocation, the panic, the fear kind of never materialized. Yeah? This time around, it feels different.
Yeah.
And yet, if you look back maybe 3 years ago, 4 years ago, the World Bank said, 80% of all jobs are going to be gone. And it hasn't yet happened, but it still feels like this time is different. Yeah. So it's two-part. First part of the question, since you're sort of close to this industry, and I'm particularly referring to this time around, AI is a broad thing, but it's particularly affecting knowledge work. And given that the Indian industry is quite exposed or is very long on knowledge work, the question, the part A of the question is, are you actually seeing disruption today, all right, on the ground, both in the companies you're investing in, and if I'm sure you're still connected to some of the industry broadly, are you seeing that? That's part A. And if you are seeing that, then the second part is, how does in the long run, I hope your utopian idea of, which is what I've always thought about, universal basic income, right? Maybe that happens. None of us have to do anything, and we get some income. But in the intermediate term, how do you think these companies are going to cope?
Yeah. It's a lot to unpack. I'm not sure we have the time. We should maybe have to get a drink and work it all out, Venkat. By the way, Venkat's Venkat was, I got to know Venkat at Dun & Bradstreet, so I've known Venkat for a very, very long time. Here's what I would say. I think you're right about the pace of dislocation this time, right? Feels different. And if you take a long arc of history, I think that the folks who are at Northeastern here, for example, will have to face that kind. In the Industrial Revolution, the average person faced that maybe once in their life. And most of the time, when you look at how the transition happened from farms to factories, actually what happened was that people who were involved in agriculture got disrupted, but didn't actually retool or retrain themselves. It was a new generation that came to the factories. The young people came to the factories, and the older generation who were working on the farms retired, in most cases. That was the aggregate number. I think in this case, people in this room who are beginning their careers will have to face that disruption 2 or 3 times during their working life, maybe more. So that's another difference here, which is that you'll have to fundamentally reinvent yourself at least 2 or 3 times in your career, which you probably didn't have to do. Like Frank D'Souza did Cognizant for 26 years, and if I wanted to retire, I probably could have, and I'm here because I'm doing enjoy what I do. But I don't think that this idea of 26 or 30-year careers might, because 26 or 30 years, I don't think job categories will exist perhaps in the knowledge world will exist for 26 or 30 years. So I do think you're right. I think that you're already seeing the disruption happening, to answer the second part of your question. And you see it in pockets. For example, in the last month or two, both TCS and Accenture have announced layoffs. That's a kind of a canary in the coal mine a little bit to me. But Venkat, it's not clear to me that, and we just don't have enough data to say that jobs are not going to get created at the same pace that jobs get destroyed. I'll give you one example. So if you look at the world that we typically tend to look at, firms like TCS and Cognizant and Infosys and so on and so forth, you can see some of this as some of these layoffs have gotten announced and so on and so forth. But on the flip side, you look at this firm called Scale AI that just got acquired, if you will, by Meta, significant investment. That entire business was based on a new set of jobs that didn't, the data labeling that didn't exist 5 years ago, right? And so, you do have these examples of jobs that are getting created very, very fast as well. I'm not entirely sure where the water will settle on this. But I do think that there's a reasonable case for optimism here. And my optimism comes from the fact that when we sit here 10 or 20 years from now, we will almost certainly say that the world is more technology intensive than it is today. And if that is true, then we're going to need humans doing things to make that happen. That technology intensity is not only going to come from some smart machine that's going to make the world more technology intensive. And so I think that effort is going to require humans, and it's going to require new categories of jobs. And we'll figure out what those are.
But Frank, there's also, if I can just jump in here again, there's also the question of the winner-take-all kind of an outcome, whether that is going to get more pronounced going into the future. Well, yes, there will be jobs, but a lot of people are doing very, gig work is an example of something where new jobs have been created, but they are very low paying compared to those who actually have the kernel of an idea in this knowledge economy, who become the creators of something that is much more valuable than what the rest of us can create. So the problem of inequality, which I think happened in manufacturing with the blue-collar workers for a long time, is now catching up to the white-collar workers. And if we have the same trend, socially, then we have a problem. Even if people have jobs, the jobs are not very attractive, then we have a social challenge. How do you manage the losers, so to speak, and a shrinking number of winners?
Yeah. I think, Ravi, that's a complicated question. Here's what I would say. First of all, if you do really see that play out in a substantial way, I think we are going to have to sort of rethink a few things. The first is how do you distribute wealth across society in an equitable way? And like I said, maybe that turns out to be you tax the machines. In a winner-take-all situation, it's because you have machines that are doing a significant amount of the economic work. And so is a world where you tax the robots and you distribute that to the humans, is that a bad world? We'd have to. And then, I think the other part of it is, as I said, it's a relatively recent human phenomenon where we derive our sense of purpose from our job.
Right.
I think that this idea that some jobs are better than others is actually a relatively more recent phenomenon. And so I think we're going to have to perhaps go back to thinking about what gives us fulfillment, what gives us purpose. if the world that you envision plays out.
Right, especially if we live longer too. So,
If we're living longer.
so what do you do? Watch Netflix for 60 years? I mean, I don't know what we would all do. Yeah, Ashish?
Thank you. So you talked about the early days of the internet and the build out in fiber optic, in the huge amount of capex that went into that. And then, this was the early 90s, and then we had a boom and a bust and significant excess capacity. And it took decades probably to absorb that. We're seeing similar, actually orders of magnitude probably, more of capex, investment in data centers. And it's not just in technology, but now in energy also. So everyone is sort of out-competing themselves in spending in different parts of the world, in different sectors. Do you think that the spending that's happening now is justified, or it's now going over the top, and it will lead to a similar boom bust that we saw in the internet, and we'll have excess capacity and it'll take a long time to absorb it?
Again, I don't have a great crystal ball, but, and I don't mean this to be a non-answer, but almost certainly we're either going to have overcapacity or we're going to have undercapacity, right? What we're building now, for sure, is not exactly what the world is going to need, right? It's either going to be too much or too little. And the reason I make that point is not to sound silly, but because I think because you can't predict, right? Then, smart investors are making the best judgments that they can about what the future is going to be. And I think that the calculus is that it's better to be on the overcapacity side than it is on the undercapacity side right now. That's the judgment that's being made. Will capital be destroyed over the next decade? Possibly. And if you ask me personally, I think it probably will be destroyed. I think you'll see an internet-style overcapacity situation. But look, I'm not any wiser than the next guy, right? Because the calculus on that is really a gut right now. Because what's unknowable, and I think what is really the key unknowable in all of this, is how fast do the algorithms get better? Because the algorithms will get better, and therefore will require less compute per unit of output. And so as they get better and better, right? Because right now, many of the capacity planning models are assuming that with today's state of technology, and you sort of drive it, you project it forward, this is what the demand is going to be. But what's unknowable in there is how fast innovation makes the models better, and therefore require less compute, and therefore require less power. So it's somewhat unknowable, but at some level, I kind of look at it and say, well, this is how innovation happens, right? This is the path of innovation. You make bets, and as some bets will play out, others will not. My gut tells me we're way overbuilding right now. It's hard to see where the revenue comes from all this capex. But
and now you're a investor, a private equity investor. What do you make of valuations you're seeing? What do you make of OpenAI at $500 billion valuation? Something we've never seen before of startups, basically.
I think, first of all, we're not investing in infrastructure. We're not investing in.
That says a lot. That says a lot.
We invest only in tech, in services businesses, right? So it's not the space we invest in, to be clear. I think, are there bubbles in some sectors? For sure. But at the same time, I really do believe that this technology is very profoundly different from anything else that we've seen. And so I think that there will be a set of new substantial winners in this space. And I think what you're seeing in these valuations is investors that are making bets on who those long-term winners are going to be. And the companies you've mentioned, OpenAI and so on, have as good a shot as any as being, you can say OpenAI is already one of the winners. Whether they'll sustain that or not remains to be seen. But that's, again, how capital flows. And so I think it's not irrational in my mind. Some of the valuations may seem irrational, but it's not irrational to think that there are going to be another set of massive tech winners over the next decade or two. And capital is trying to find those.
Larissa?
Hi, Frank. Thanks so much for this conversation. I took pages of notes, so I really appreciate it. I'm Larissa, professor of international business and strategy. And I know we are talking about India's role in this race to the bottom with AI. And I wonder if you have any insights on the role of other emerging economies, for instance, large or big economies like Brazil or Paraguay, which is very little, in adjusting to this trend. I say that because India is very rich in talent, China rich, and the US has everything. So how can these countries catch up, or will they catch up?
Yeah, I think that when I think about at the economy level, I think one of the things that we shouldn't, I think is often perhaps overlooked as perhaps mundane, but I think that AI will make all sectors or many sectors of the economy much more productive. And so when you look at any country, for example, in India, let me come back to India, and I know some of the numbers. In India, the projection is that over the next decade, by applying AI to more traditional parts of the economy, that there can be a 35 to 40% uplift in GDP in those parts of the economy. Right? And so, these are things like automobile manufacturing and so on and so forth. And so I think the first point I would make is that AI is going to create an opportunity for any economy to just be more productive, right? To make the marginal product of labor in those economies much higher, and therefore, in theory, lift GDP, lift working, the product of labor, therefore wages, and so on and so forth. And so I think that the countries of, I think many of the developing countries, developing economies around the world will have that opportunity. We shouldn't dismiss that, or we should actually be spending most of our time thinking about that, because I think that's actually where the biggest impact across the globe is going to be. The types of questions that we've been talking about today, which is who's going to win the innovation war, is actually in that context a smaller question, right? Because for Brazil, there's a question about whether Brazil, I'm just using Brazil as an example, can Brazil create some core innovation inside of the country? Yes, maybe no. We can debate that. But for Brazil's economy, the application of AI to all of the sectors of the Brazilian economy is a far bigger opportunity. And so that's really for most of the world, that is really the core question. And then there's a secondary question about where does the innovation happen, which my suspicion is will happen in the pockets you talked about, right? The US will continue to be a major source of that innovation. I think China will continue to have a substantial role. There's a question about what role India will play. But you'll see these hubs of core innovation. But the bigger question will be, can the governments of these countries create forward-leaning and forward-thinking policies to enable the adoption of AI across the economies? Because, by the way, the adoption of AI in these economies will also have the same kind of dynamics that you see at a company level, which is that it'll potentially destroy jobs and so on and so forth, while new ones get created.
Yeah. In the back? Yeah.
Hello, my name is Abhishek. I just wanted to take a step back from the current AI thing. Like we all are talking about AI, but I want to talk about the thing on which AI are trained, like NVIDIA chips. So what I want to know your view on the thing that there is only one major brand, NVIDIA, where all of them they train their models. But now we are in the domain where their customers are turning into rivals like Microsoft or Meta, or they are building their own chips. So I want to know like what would be the future of, like what would be the emerging market in next few decades?
Can you just maybe say a little bit more? When you talk about the future, you're talking about in the chip space?
Yeah.
Look, I'm just not smart enough to be able to answer that question. What I would say is this, right? I think that, as you said, NVIDIA has a significant advantage right now, a significant head start. There are a lot of people trying to chase them, as you know. And I don't have a particular perspective on. It's not really my field, so I don't want to really delve in there. What I would say, though, is that I suspect that 20 years from now, when we look back, I think we will look back and say that the compute was not the determining factor. In other words, I think that over time, what we'll find is that the source of compute will become less important than the other things which are higher in the stack. I'm not to say that we don't need compute by any stretch of the imagination. But I think as models and algorithms become more efficient, and as we innovate at the algorithm level, the underlying compute and where that comes from will become less important.
Thanks.
Okay, I think we have time for maybe one last question from Vivek.
Yeah. Hi, Frank. I'm Vivek Soni. I found your comment, I heard it twice, about taxing the machines as a very interesting concept. And it's an interesting concept you're saying in terms of distribution of wealth. But machines are assets. Assets are owned by individuals or corporations. So when you talk about taxing machines, could you just, I'm just trying to dig deeper here. Are you talking about taxing those corporations who own those assets, or just?
Look, it's hard. It's actually hard to know how this all plays out, right? But if you believe, I think I answered the question in the context of Ravi's prompt that there is some scenario that says you have a winner-take-all, or you start to see winner-take-all dynamics, or in the context of could you have unicorns with one person, with one employee? And the broad context is, does this are we at a point where this technology creates such concentration that economic value addition gets very heavily concentrated in specific individuals or entities, let's call it, whether that's a corporation, whether that's an individual, whatever that entity is. Look, I would say that I'm on the fence about whether that will actually happen or not. Because competitive dynamics are such that I think competitive dynamics will pull away from that happening, right? It feels to me like there will be enough opportunity here for multiple firms to emerge. But in the event, I was saying, in the event that I'm wrong, which has happened many, many times in the past, so I don't have any monopoly on wisdom here. A logical answer would be then you tax whatever that entity is, whether that's it's easy for me to call it sort of taxing a machine, but whatever that machine, whatever the ownership structure of that machine is, wherever that wealth is, you tax that and redistribute it.
Well, that's an interesting issue in and of itself, and we're dealing with it as we speak, I think, in the US. I don't know if we have time for any more questions, but I think, Frank, you will stay around for a bit.
I'm here, yeah.
Yeah, so you people, if you have any questions, you can always. Should we? Okay. That's a
one
very
over there.
persistent question.
One over there.
Last one.
Trying really hard from the last time to just raise my hand and get your attention, but here it is at last. So, Frank, I'm Satvik. I am an MSCA student, and having listened to you, and you told me that from the past 1990s you've been following the AI field, right? So, what do you see is the next big AI jump? Is it more towards a generalized AI, or probably a more domain-specific AI? Because we don't really see doctors doing merge conflicts, right? They don't resolve merge conflicts. It's the doctor's job to just treat the patients, and it's the computer scientist's jobs to do the AI, the development stuff. So what do you think about that?
Yeah, I think it's so hard to make predictions in today's world. It really is. But look, I think that let's say in the next couple of years, or like where the thrust is right now, from what I can see, it's actually in much more domain-specific areas. I think there was a lot of talk, as you know, about AGI, and continues to be a reasonable amount of talk. I think that's going to turn out, and is already starting to turn out to be a lot harder than we thought it was going to be. First of all, what is it? What does AGI really even mean? And then the pursuit of that has turned out to be a lot harder than we thought it was going to be. On the flip side, though, is that fine-tuning of models for specific applications and for specific domains has turned out to be, we've seen tremendous gains there over the last couple of years. And so I think you'll continue to see a lot of both interest, capital, and also, I think, R&D advances in that space, in just kind of how do you fine-tune and how do you do specialized training of models for particular domain areas in the next couple of years. I think to really advance the general intelligence, you're going to have to see another couple of foundational breakthroughs like we saw 5 years ago, which is absolutely possible, but we don't see them right now.
Thank you. I'm just curious, how many of you are really anxious about the future? If you are, raise your hand.
And the question, Ravi, is if you'd asked that question at any time in the past, would the answer have been different?
I don't know. I've never thought to ask it, but the fact that it occurred to me today means at least I am anxious about the future, I think. And I was just curious how many others share the same concerns. But this is a very tough topic, and Frank, we're really lucky to have you here to walk us through it and share your perspective on it. So I want to thank you. Let's give Frank a applause. Thank you, Frank. Thank you. I also want to thank all the people who helped put together the program. I'm not going to go through a long list, but a venue, the catering, the videotaping, the audio, the technology, Vivek support, all of that. But I want to thank Catherine and her team and the volunteers from the Center for Emerging Markets for all their very hard work. We've done it many times, but every time it's a nail-biter for us. Everything should go smoothly, and it did. Again, thank you.
Thank you.
Real pleasure.